It's a warm welcome to Africa 360. We bring you news and views on Africa from every angle. I'm Chris Maroleng and you're watching Africa 360. In this week's show, we look at investing in Africa. As emerging markets take center stage, Africa's economies are becoming a very attractive investment. But with so many obstacles still in play, will optimism influence outcomes? And will Africa start turning a profit? Can we turn Africa rising into Africans earning? Do stay with us as we find this out. Africa certainly has wealth, and the number of African billionaires and millionaires are a sure sign that there is money to be made on our continent. But how accessible are Africa's markets? Africa 360's producer Lindsay Schutel tries her hand at trading local stocks and finds out what it takes to really break into the African market.
Nairobi, Johannesburg, Abidjan, and Lagos. These are just some of the cities eyeing huge economic growth. Africa has always been an investment destination, but in the last 5 years, investment strategies have been changing. While they still focus on the continent's mineral wealth, more attention has been given to consumer spending. Investors are taking the long view and focusing on long-term value in local economies. Imara Investments is based here in Johannesburg. It's one of the few brokerage firms that specializes in trading retail stocks. The company is positive that the current optimism in African stocks is not just a passing trend.
I think this is a long-term play. Africa is really exciting at the moment. The government seem to be very willing to open up their countries and their markets and their companies, and I really think this trend is going to continue. Consumer-driven growth in Africa is something that we really look forward to, and there's a huge population growth sort of underpinning that.
Investing in Africa may still seem quite daunting, but the initial fear is turning into curiosity, and consumer goods are becoming a sure point of entry. Entrepreneur Swadi Martyn-Leek is so confident in that demand, she left a multinational corporation to establish her unique venture. Iswara is a luxury goods brand that began with specialized teas and expanded to jewelry and homeware with a contemporary African identity.
I began Iswara out of a couple of frustrations and passions. I think it's a mix of passions and frustrations. Passion for African art, African culture, African history, and everything that's lifestyle but in an African way. But also frustration of seeing that Africa is a major exporter of raw materials which are not transformed on the continent.
As an entrepreneur, what are some of the challenges that you've experienced investing and doing business around Africa?
The biggest impediment is exporting out of Africa. If you look at the history of Africa, some trade routes are already set up, but they have been set up from the colonial times. So they're very efficient. If you want to export oil, if you want to export raw material, very efficient routes from certain points of Africa to other points. What is not very efficient today is actually just exporting from one country in Africa to another, from one city in Africa to another, from any place in Africa to another, and also not a given raw material, but a finished product. And that's a huge, huge challenge.
The economic and financial view of Africa is certainly changing. And while structural challenges still exist, analysts are confident that the profits will change the lives of ordinary Africans. It's the time frame for that change that remains unsure, though. Lindsay Schutel, Johannesburg.
Well, joining me in studio to talk about the ins and outs of investment are Martyn Davies. He's the head of Frontier Advisory, a strategic and research firm specializing in emerging markets, and Clive Ramathibela-Smit. He's an analyst and Chief Operations Officer for Inkunzi Investment. Gentlemen, thank you so much for joining us on Africa 360. Let's get right into it. And Martyn, I'll start with you. A lot of people, bemoan the fact that trade amongst African states, trade amongst African businesses hasn't been as dynamic as other regions, for example, in Europe, in Asia, etc. What are the challenges, and why aren't people grasping these opportunities?
Chris, to be slightly contrarian, we're not doing so badly. If we're comparing to Asia, Europe, where intra-regional trade of total may be approaching 60, 66%, maybe two-thirds of total trade is intra-regional, there are regions that are even worse than us. We may be nudging 10% at best. Latin America, intra-regional, trades less as a percentage of total trade than what we do. The Middle East is the lowest. So I think what it signifies is, firstly, I think there's two main factors here. Firstly, when you do not have a deep value chain of production in a regional economy, economies, companies, countries ultimately don't have much to trade with. That's the first point. I think the second one, and this is maybe more historical but still very prevalent in Africa, the lack of connectivity in the region has resulted in that African economies are almost standalone islands, if you will, in the broader continent. And think about it, it's very difficult to find Africans who are experienced, who have business skills, experienced, multilingual perhaps, in different countries, different regions across the continent. How many Africans do you know who can speak French, English and Portuguese and can operate hypothetically in Ethiopia? So we don't have those relationships because of lack of connectivity. Historically, that results in trust. Trust is required to build or to enable commerce and trade ultimately. And I think thirdly, maybe supporting that is the institutions in countries themselves, not entirely geared toward intra-regional trade. I'm talking banks, perhaps, insurance companies, credit agencies, and the like.
Clive Ramathibela-Smit, the issue that I'm trying to get at here is that normally when we talk of trade, we think of big business, we think of multinational companies that have the capacity to deal with the challenges that have been so well elaborated on here by Martyn. But surely, why aren't the smaller guys, the small, medium enterprises, trying to grow their market share by grabbing what I believe is low-hanging fruit, trading and getting into the African continent?
There's two reasons why we invest. One is because of saving. Two is because we want to make money. So for me to make money, I have to learn somewhere how to make money. And I want to start locally because that's where I understand the best. I understand the environment, I understand the people, I can speak the language, and I can actually cross the barriers and become very competitive. Now, put me in a place where I don't understand the environment, where I don't understand the language, and not only that, I don't even know how to break the barriers. It becomes a conundrum, and it becomes very difficult, therefore, for me to put my trust in that particular area. Despite the fact, Chris, you just mentioned, that it's low-hanging fruit, that I can take advantage of. But I'm not trained as an entrepreneur to take advantage of those particular markets, and it makes it very, very difficult for an ordinary South African, Zambian, Zimbabwean to start making business in a different land. And now what we're seeing is there's a simple concept behind it. It's about testing the waters. And our people that have come here to seek asylum have proven beyond doubt that it is possible, despite all the negativities behind it. But they set up little shops, little puzzle shops in the neighborhood, and they're much cheaper, and they're very competitive, and they can live off that. So what does that tell you? Competition is available. It shows you that opportunity is there, but fear of the unknown still persists.
We'll pick up on this issue. Should investors turn their focus to Lagos, to stock markets? Should they stick to Johannesburg, or perhaps it's time to start paying attention to Blantyre? Stay here with us and find out what the answers are after our break on Africa 360.
And that's what concerns me, where everyone is thinking that Nigeria is ultimately a sexy economy, but no one would ever say the other end, Namibia, has any value whatsoever.
Welcome back. If you're just joining us, this is Africa 360. The view on Africa's economy is changing. Those are scenes from some of Africa's busiest stock exchanges, the Lagos, Nairobi, and the Johannesburg Stock Exchange, which is still Africa's largest trading platform, but is South Africa's position as Africa's economic gateway being challenged. Well, separating perceptions from fact. In studio today to help us do that, of course, is Martyn Davies. He's head of Frontier Advisory, a strategy and research firm specializing in emerging markets, and Clive Ramathibela-Smit. an analyst and chief operations officer of Inkunzi Investments. So, are Africans deriving the earnings from this resurgent Africa that is premised around growth and development for the continent?
No, the simple answer. And the reason why is because all this growth, all this potential does not trickle down to the ordinary person, and that's why they don't feel the effects of it.
But Clive, one of the things that we do see, and empirically the stats seem to indicate that, is that we are seeing a large middle class emerging in the African continent. So the visuals and the concept of Africa being an impoverished mass is changing quite significantly. So this seems to go against what you're saying, where, you know, people may not be making those billions, but surely they are making some earnings.
Making some earnings, and perhaps maybe it is unfair to make a comment like that from my perspective, but I live and see the results of business making more money. So it's because you're starting off from a lower base, it is automatic that you will find your middle class gradually growing. The growth perspective for Africa is based on a single few businesses that do relatively well, as opposed to entrepreneurs who are built, who are strong, small, medium enterprises who are doing well.
But this is a good place to bring Martyn back into the debate. When you look at Nigeria, a lot of people seem to doubt the veracity of the story, and this really is around the question of political and economic risk in Nigeria. There's Boko Haram up in the north. There has been the MEND in the Niger Delta who have been causing disruptions to the economy, to society. Tell us a little bit about Nigeria. Is it as good as everyone is saying?
Nigeria's case is entirely numbers game. You've got 170-odd million people. Maybe, as you mentioned, Boko Haram, northern part of the country, maybe 1/3 of the country is almost inaccessible to many foreigners and foreign companies purely because of security concerns. However, as I mentioned earlier, if this is a consumer-driven Africa rising narrative, the politics for security issues are largely irrelevant. The revolution can happen. A revolution can take us anywhere, but revenues still go up. People will still buy basic commodities, whether it's a McDonald's burger, whether it's a coffee, whether it's a toothpaste, whether it's a breakfast cereal box.
These governance challenges surely must be the fly in this ointment, right?
Chris, you're right. But ultimately, what view are we taking here? We're looking at it through a lens of corporate consumer capturing. Politics is irrelevant. If we're looking, we can't equate the growth we're getting. Don't equate growth and development. They're two very different things. And then we can't say Africa rising is Africa rising equally? Not at all. There are certain countries who are rising at different speeds, perhaps different paces than others. And I think what Clive was saying now is entirely correct. What we're seeing in Nigeria is a case in point. 90% approximately of Nigeria's government revenue comes from one resource, oil. So you have massive liquidity, but in a very small, highly concentrated segments of population.
I'll ask you the question again.
Yes.
Should we believe the statistics?
I don't think so.
So you
look beyond
not
the
buying
stats.
it.
I look beyond it because a lot of the statistics are driven by commodity prices, which are very, very variable. If you're looking for good trickle-down economics, you want to see a good diversifying economy with an ultimately evolved political model.
So tell us then, Clive, why are you agreeing with Martyn on this issue?
Because I see it every day. You know, when you go into those countries, when you look at it, you look into Nigeria as a case in point, where the oil is such an important thing. Milling, Dangote milling, is made one massive billionaire out of one person, and you don't see it trickling down to the rest of the people that are supposed to be benefiting from it. You look at the cement industry. Cement industry should be massive in Africa because we're building all sorts of dams, we're looking at energy, and we're trying to actually become one of the best producers of energy in the world, but we can't do it simply because the people that hold this barrier, that have it's in full control of them, and therefore the middle class and the poor are not getting advantage of it.
So trickle-down is happening, but it could be accelerated if only the politics was more enabling for that process to take place.
No, look, fair enough, and what you're saying makes sense, but another interesting thing is all of these terms that are coined by people like Jim O'Neill. First of all, it was BRICS, you know, Brazil, Russia, China, India, South Africa as emerging markets, you know, countries to look out for. Of course, South Africa being really the smaller partner in it. Now, we have MINTS, which is Mexico, Indonesia, Nigeria, who we're talking about, and Turkey. But the interesting thing is that another one has come up, which is Kings, you know. And the interesting thing about this Kings concept is that they're saying there's similarities in terms of Kenya, Ivory Coast, Nigeria, and Ghana. A bit bizarre. I don't see where we're going with this. Does this give us any, or the investor, any great clarity on where they should be looking by grouping these countries into these arbitrary systems?
Okay. Do you buy newspapers, Chris?
Yes, well,
why do you buy
now more online?
Yeah, why do you
because they give information.
Yeah, see, that's what happens when you are following smokes and mirrors. It's because somebody has to come up with something to create some sort of, you know, anxiety and hype. The BRICS has been the most disappointing of groups that I've ever seen in recent years, and it was simply based on the concept that these are the 5 biggest emerging markets that you should be concentrating on. Yeah. Their currencies have made them, all those facts actually be flawed, simply because of the fact they've been so poor and they've not actually resisted the global economic environment.
Just one third point, Chris, and an observation, whether it's countries or companies. We can't put valuations on sheer numbers, but it's actually happening. We're going through almost this decade and a half long fad where whether you're a China, an India, a Brazil or a Russia or a Nigeria, whether you're a Facebook, whether you're a WhatsApp, whether you're a QQ, if you have lots of people in your entity, be it a country or a company or your membership base, regardless of how much money you are or how much money you make, be it profits or you don't, or how well governed you are or you're not, somehow you have a high valuation. And that's what concerns me, where everyone is thinking that Nigeria is this ultimately sexy economy, but no one would ever say the other N, Namibia, has any value whatsoever.
What is the value of African countries and their economies? Are we seeing Africa turn into a sound investment, or are the noises of unbridled optimism drowning out the true story? Stay with us on Africa 360. We'll be unpacking that for you after the break.
Nobody can produce cheaper phones than China. The question is, where will the mass be going if we produce it locally? Who do we distribute it to? And that's where that intra-continental relations will start working in our favor.
Welcome back. If you're just joining us, this is Africa 360. The question that we have on the agenda today is Africa a viable investment destination? That's the question that we will be looking at, and to help us unpack that, I'm joined by 2 very insightful gentlemen. We have Clive Ramathibela-Smit, an analyst and Chief Operations Officer of Inkunzi Investment, and Martyn Davies. He's the head of Frontier Advisory, a strategy and research firm specializing in emerging markets. Clive, what constitutes a sound investment for somebody on the African continent, maybe a small, medium enterprise who's looking at investing, who's looking at growing their share? How do they get in? What's the advice that you'd give them?
3 things. 1, insight. You need to know the market you're going into, understand the people, understand the philosophy behind business and the culture of business that you're taking place into. That's very important. You need clarity. You need to know the regulations. What are the rules? What is going to be the red tape that stops me from making sure that my business takes place in that particular area? The last one, which is very, very important, especially in the African context, is transparency. You need to understand what it is that is taking place in that country. If you don't know, then you can't tell. So therefore, you need to understand and study those particular markets very clearly, and you must have transparency. The laws of that country must be clear to you. Whatever it is that makes it difficult for business to succeed in that particular area must be very clear to you, because as an investor, the one thing that we all want is comfort.
Martyn Davies, do you agree with that assessment, or is there something else that we're missing here that we need to be telling those guys out there, the hungry guys who want to exploit Africa?
We need to be hungrier. South Africa was founded on entrepreneurship. Yeah. It was always, we were talking about the United States earlier, Chris, and the US was go west, young man. Considering we're amongst probably the fastest growth region globally today, the mantra in South Africa should be go north, young man, to seek your fortune.
There you go.
It certainly should be. So what do? I think get on a plane, get on a bus or a car, whatever it may be. It's tough to get around. It may be a little bit expensive, but get into these countries. Get a good feel for it on the ground. Make some friends, meet people, seek out the opportunity, and then come back with an idea and implement it.
Martyn Davies is getting into a bus. He wants to seek out 3 favorable markets where he can get into the retail game. Where's Martyn going?
Number 1, Ethiopia. I'm very, very positive. 90 million people approaching. Very much off a map of many South African companies. It's not Anglophone, it's not Francophone, it's not sort of the close Lusophone Mozambique, Angola countries. It's something different, fantastic country, very different to the rest of sort of sub-Saharan Africa, unique identity. Secondly, a country for me which is the easiest to operate in the continent, in terms of best governance, efficiency of, in terms of regulatory environment, business environment, 15, 16 odd million people, Rwanda. Rwanda, incredible things happening. What happened in Rwanda 20 years ago, the country is unrecognizable today. Thirdly, where everyone is, the country you mentioned, and there's another one I'll add on to it, which are incredibly difficult, highly competitive, very bureaucratic, often very corrupt, but incredible opportunity and massive liquidity. Again, if you don't believe the numbers, is Nigeria, or more accurately Lagos, and Angola, or more accurately Luanda.
Fantastic. It doesn't look like Clive travels on buses and coaches. He looks like he's on business class into Africa, looking for, the big money. Where's Clive flying to?
Certainly the Ivory Coast is one of the areas I like the most. I do like the story of Ghana and Accra. It's a very nice place there. I've been and I enjoyed it, and I think it's much easier. But then you land in Lagos, and then the lights go out for some reason for an hour at the airport, and you can't get free. And those things make me think, geez, you're running a whole stock exchange, or you're running a trade, and then your lights go off for some reason, and then you can't continue to do business for an hour, which could kill me for somebody who trades on a day-to-day basis. I'm an intraday trader, so that makes me angry. So those kind of things will put me off, certainly.
He sounds like a spoilt investor. Not good enough for Martyn's mantra, which is go North Africa.
There we go. Stick to Santon. Yeah.
But coming back to a more serious question here, Martyn, a lot of people have been going on and beating this beneficiation drum for the African continent. But at the same time, a lot of other people are saying, look, there's nothing wrong with taking advantage of a comparative advantage. If you are a resource-based economy, good enough for you. Be efficient as a resource-based economy. Derive the most benefit there. What's your view on this?
Somewhere in between, Chris. I think firstly, one must understand there's absolutely zero competitive advantage to be gained from having resources in your economy and seeking to beneficiate those resources. Why is China the world's largest iron ore manufacturer, but has no, or steel manufacturer, but has no iron ore? Japan probably number 2 or number 3 with no iron ore. Where's all the iron ore sitting? It's sitting in Brazil, it's sitting in Australia, it's sitting in South Africa perhaps. There's countless examples one can look at of where, through economic complexity theory perhaps, there's a very naive economic assumption that if you have the resources, somehow you should naturally be able to beneficiate and have a world-class manufacturing industry. Totally false assumption.
Now, here's another thing. One of the things is the high costs of industrialization, and one of those biggest challenges is energy. How does Africa develop the capacity or the energy requirements to begin getting into this beneficiation? Do you think we can ever do this? Is there enough money?
We can do that, Chris, if we work willingly together, government, private sector, labour, which has always been the challenges, hasn't it? One of the things that Martyn just mentioned, which is critical, is these countries that he's mentioned, like China, like Japan, and I'll include 2 more. I'll include India and Brazil. There is no country in the world, not even in Africa, that can produce with mass and at the price and costs of those particular countries. There's nobody can produce cheaper phones than China. The question is, where will the mass be going if we produce it locally? Who do we distribute it to? And that's where that continental relations will start working in our favor, because our countries here in Africa, or well, most of the 53 states that we've got, are still unfortunately purchasing from European and Asian markets. So when are we going to get industrialized? No, we can do it ourselves, but the cost of us actually importing things from outside of Africa is still much cheaper than us producing it locally.
We can do it ourselves if we have the right strategies. Certainly very sage advice coming from Frontier Advisory and, of course, Inkunzi Investment. That does bring us to the end of this week's show on investing in Africa. Of course, many thanks to our guests. And remember, if you would like to invest in Africa, tell us via Facebook or tweet us at Africa360_ENCA or send us an email. So until next time, when we look forward to making you profitable and letting you see those investment opportunities in Africa, do take care. Thank you, sir.